Welcome everyone to the Kendall Report. It is Monday night and had an interesting day yesterday. Markets were really quiet for once. We basically traded softer all day. The NASDAQ is obviously under more pressure than the other markets, rightfully so. My title for this video tonight is Wall Street's firms they're screaming pivot. And I talked about this in our live room earlier today, that this is all basic rhetoric, just trying to get the algos to kick in, trying to actually set up some sort of, I guess, underlying bullish sentiment that this might happen. I am going to continue as we come in closer. We're coming into just about a day and a half out from the Fed announcement that they're going to do exactly what they've been saying they're going to do. And these other banks are going to continue to, in the background, do their job. I have a report here in my hand on my phone that from the finance ministry in Japan, they did $6.3 billion of purchases of yen, and we're continuing to see intervention on. This was on the 27th, the 28th, they did 2.8. And then we just saw numerous transactions coming through every day. They're now coming in and trying to support the yen, which we knew they were going to do. And so they must have sold enough bonds to get that out, although it looked like there might be some selling going on Monday a little bit on the bonds again. But it's interesting that the Fed, I think, we'll see what comes, but this is my expectation, is that they're going to just continue to talk the line that they've been saying. They want to keep the credibility, while the Bank of Japan, the Bank of Canada, the Bank of England, the EU, everybody else, all the other big central banks are running some schemes in the backdrop to change sentiment. And there's a couple of things that I'm not going to share with you tonight. I want to spend some more time on research, but I think we uncovered something really significant in the live room today. Sometimes the live room is just about trading. Other times it can be about doing analysis and education and those type of things. And today actually went an hour over. So we spent there was a slight disruption in the middle, but we continued to go. And during that time, there was something that happened. I'm going to share this with you, not tonight. We've got a lot of other things that are more important. This is a longer term aspect. So possibly I'll do a special video on it, or at least I'll cover it and start to feature it as we come into next week. And just remember, next week, no more night shows. They're over. And right now, the plan is to come live at about just around 9:15 New York time, 15 minutes pre-market. I'll start to put some flyers out there. Those of you that signed up for our email list, we'll put some things out there. And as I've been telling you over the last couple of days, I'm going to expand my coverage substantially as we go through the week. So finishing up that schedule now. So I'm looking forward to that and getting into the sync with the markets while they're live. But let's talk a little bit more about what was going around today. And, we saw, Joe Brandon coming out and threatening, windfall taxes on the oil companies. This is, the best I can tell, is complete. And I'll just tell you that there's no way they're going to do that. Think about what's been on. The Democrats have both House and the Senate right now, and the presidency. Why don't they do something? Why are they saying this right now? You know why. Next week's elections. They're trying to make it like Big Joe is they're going to help us all out. And he's going to get those bad oil companies. And I mean it, he said. I'm not kidding. Nothing worse than old guy like me, or worse, an older guy that's senile, threatening some threatening people. What a joke. It's unfortunate that it's sad what's going on there, but this is just all rhetoric. And the same thing with the banks. They're trying to pump the market right here before the elections, right in front of our eyes. And they're probably going to succeed to a certain degree. And, this is just going to be a complete, best way to put it, that I would think, I had these thoughts earlier, and I'm not going to go very deep into this, but I just feel like what's going on here is a complete manipulation. Try to get a bid in the market so things feel good coming into a week from tomorrow, which is election day. What amazing, amazing world we're looking at. I don't know if you've seen some of the reports out of Brazil, but it's kind of crazy down there. And I'm just telling you right now that this is about as blatant as manipulation as you're ever going to see. And it's coming from all levels. Wait till you see and hear the BS that Powell's going to spin on Wednesday. So it's going to get really interesting. How far can they bid this market? I don't know. There's some things that actually still look good. I'll show you in the technicals here in a few minutes from the standpoint. And there's a fairly major event that I'm going to reveal tonight that happened on the database. So there are signs that this market is rotating and starting to get more traction, and there's more to this. But I really think the market sentiment really is a manipulation job at the highest level. And I think they, like the headlines. What were the headlines that you saw today? Dow Jones best and since 1976, best month ever, and up 14%. That's the headline. And I'm going to go through tonight when we get into the technicals. We're going to get into looking at what the monthly expectations. We uncovered today's live stream. Thank you everybody that was there. Was just really good. We really got into some really good dialogue, and I think there's going to be a lot to come out of what happened today. I really kind of sucked my afternoon down getting into some research on some of these things, and I think it's a good thing, which I will reveal to everybody, and hopefully before we get into next week. Take a look at a couple other things that are going on out there. We've got 303 earnings reports coming out. A lot of pharma. You got Pfizer and the big boys coming out there in pharma. Another oil. You got BP. There's quite a few pretty substantial companies. As I told you yesterday, last evening, is that what we're getting this week is a huge earnings, 1,620 plus earnings reports, and this is the core of the economy that we're getting here. This is the real stuff. You can look at the Apples and the Googles and all the fringe stuff and the big tech, but this is the core of the economy that we're seeing here. And just about every estimate that we're going to see is going to be, my guess is we'll probably end up 65, 75%. All of those reports are going to be better than expected. And I still argue that this is by design. All the companies understate, the analysts understate, so everything looks good. I've been arguing this for decades, folks. If you knew me, you would just be rolling your eyes right now. Bob, you say that every earnings. I do, and it's true, I believe. It's been happening forever. It's not a new phenomenon at all. So we're just looking at, yesterday, there's a scenario that's building here around, and I'll just tease you a little bit, around the small cap stocks. And there's an event that's happening on the planet that is also causing some rotation that is, I wouldn't say not that it's not normal that it happens, but it is becoming very interesting, especially with the interest rate scenario and everything else that's around it. So I didn't really tell you anything just then. When I reveal these ideas, I want to make sure that I've thought through them really well, and I will probably share them over the next couple of nights, certainly before the end of the week. We're going to need to focus in on the Fed as we come in through this coming next couple of days. So we'll stay there, and believe me, I'm not going to forget what I'm talking to you about, but it is, and this is something, like I said, for down the road, it's not really relevant today. It is and it isn't. But what we've been seeing is the Russell has been much stronger, and like even yesterday on Monday, we had minus 0.75 on the S&P, NASDAQ minus 103, Russell absolutely flat, not up, not down, zero. And so we're continuing to see that in spite of some selling in the 10-year and some other things that we'll talk about here just shortly. I'm just looking at my notes here. I think it's time to move on. Let's get into the database, and we'll break down some of these numbers that I was looking at earlier. So here we go, folks. What's the magic number? 42%. Short-term database just printed 43.13, 801 buys. Right now, 176 sell signals. Positive rotation, primarily on the 3.2 model, and the 3.2 model on the dailies is actually the 63% of those symbols map out to be the best of breed model for our database is 3.2. So the good stuff is coming out pretty big, and that's been the case going back for a while, because you can see that we've got quite a few of the 3.2 models coming into play here. So we're at 43.13%, and I suspect that we're going to see stable to up markets for the next couple of days. So especially before the Fed, we'll certainly get some volatility on Wednesday on that release. And I have decided that we're going to do the live show at that time. So the plan is going to be, I'll just come back on screen here for a minute. The plan is going to be Wednesday, 1 o'clock on Wednesday Eastern time. I'll come live and we'll hang out and do the Fed together. And so hopefully I'm going to do the same thing that I did last time, where I mixed some of the things we do in the trading room and kind of just do an overall review and follow what's going on with the markets going on there. So I'm looking forward to that. So we'll be doing that, and definitely I think I'm hoping that it won't be revealed then, but I'm hoping that night, Wednesday night, depending on what happens and what kind of dominance that the action of Wednesday demands for Wednesday night's live stream will tell us a lot about whether I'm going to be able to reveal some of these other elements that I'm working on. All right, so let's start off with the S&P. And S&P this is bear with me one second here. It's frozen up, it won't move. Okay, so I'm going to go over to TradeStation because for one reason or another, this thing is freezing up on me. So what we're looking at on the S&P is we had basically a down day here showing us that all the PPMs are retracting. And before I go forward, because I need to get the algos, I'll probably just go to a neutral screen here so I can reset that. I'm not sure why that chart is not updating. So we'll take a look at it here in a minute. But the configuration here is continuing. If you recall, some days ago, back on the 24th of October, we got a buy signal, 37.71. That pattern continues to evolve. The PPMs are coming back in just a little bit, but we are still seeing that upward slope, and the key support levels are going to be at the moving averages, and we're coming in 38.17 should be an absolute extreme. We look at the market grid for tonight. We're looking at, let me bring that up on the screen since we're here on TradeStation. We'll see it here. We're looking at S1 38.59, the low so far 38.81, high 38.99. We're looking at R1 39.07, and if you recall, I've been talking about this 39.06 level. Above that, 39.33 is likely. I think we stay very neutral, looking at probably R1, we might be trading close to the higher end of the range and potentially at least testing that 38.60 level. Yesterday, we only got down to 38.72. S1 was 38.84, so we traded just below it, but we did not make it to S2. And we look at this is yesterday's market grid I have up here. Yesterday, R1 was 39.37. We didn't even get close to that. 14.75 was the high. So what I'm looking at is really more sideways. And if we go back 2 sessions ago from tonight, this is where we got the RXT sell signal, which suggests that we get 1 to 2 days sideways, and then typically the markets will resume to the upside. So let me just trying to find a screen. Yeah, just let me do this just for a second here. All right, I got it fixed. So here is the market grid. We've got this upward slope here. Right now, PPM1 is at a plus 0.4373. PPM2 is 0.26. These are both trend modes up. And what we're looking at here is that this 10-period moving average is going to continue to rise in the pattern. Right now, it's at 38.18, and we're likely to continue to rise at that same rate, which is approximately 17 handles. But we look at the algos are suggesting, you see that they're turning down, but even with them turning down for the next 2 days, we're going to be in trend mode. So that 10-period moving average, a simple 10, is going to be the primary support at 38.18, and then adding about 15 handles tomorrow, so we'll be up in the 38.30 levels. And what's setting up here is that the market grid turned down a little bit, and we could continue to stay in this sideways range for probably into Wednesday. And Wednesday, we're going to get some kind of weird volatility spike or something like that. And that is just based around what's going on with the Fed. I went through a lot of detail in the patterns that are out there, but I'm going to go back And on each one of the indexes tonight, we'll bring up the monthly chart so I can show you what the monthly expectations are for this chart. So we'll go back to TradeStation. Actually, I think I can get them from here. Let me just, yeah, let's go to TradeStation and take a look there. We'll go to the monthly chart. So here are the expectations for the monthly, and you can see them. I've got them in the data window that's on the screen here. S1 37.74. We're trading right now 38.99. So the 37 handle is S1. R1 is 39.91. R2 is 41.12. Now this is for the month of November. Today, tomorrow is the first day that we're going to see any November action. We can call tonight's overnight beginning of November. But the point is here that we should see it get to there, but there's a stop sign and a roadblock on the way to the 4100 level on the R2 level. That is the 10-period moving average. It is starting to bleed off some of its downward momentum, which tells us that we could challenge it. Right now, we're almost to the second derivative. That's just telling us we're going to challenge it. We'll have to get through the first derivative to signal a breakthrough. And this number that's in here right now is a big one because we're at minus 150 on 1.50 on PPM1 on the monthly. I'm going to go back and see if we can get this. I don't know what's going on with the with TradingView right now, but nothing seems to be calculating right. So let me try one thing, see if I can get it to work. Good, I did. That worked. So refresh. So this is daily. Let's go to monthly. I'm going to try one more thing. And this thing is really broken. I'm not sure if it's a browser. I've been having trouble with Google Chrome. Yeah, here we go. And got to refresh every page. So here's what I was just talking about. This is the algo on the PPM1 is also showing that we're going to be losing momentum, and so that this is the daily is going to roll over. I'm going to get it to the monthly yet. Yeah, it's not going to work. I have no idea what's going on here. Very disappointing. Sorry, folks. But the momentum is starting to turn up. It's interesting that what I was talking about earlier today, let me just come on screen here. I apologize I don't know what's going on with this platform right now. But one of the things that I was talking about, if you recall, if we go back 2 months ago, remember when we traded to 4,300? When we got to 4,300, we got massive reversal. You know the rest. We traded all the way from 4,300 down to 3502 on the cash. We printed under the 35 handle. And then we come into that was the month of September. We came into October and we did the opposite. So we got a reverse down, and then we got a reverse up. One of the things with this 10-period moving average, having these numbers that are on there right now, there is some probability if we did trade into the 40 handle or even close to the 41, that we could see a rejection from that point and see this market reverse. And all of a sudden, November closes lower. We'll see what happens. But this volatility, this was happening, you may recall, going back a couple, probably 2-3 weeks ago, where the daily chart was every day was a reversal. We had a big day down, next day big up. And it did that for, I believe, 4 sessions where we're just literally in a trading range. And I think ultimately that's what we end up here on the monthly as we come into year end, is that we just continue to stay in the trading range. And as we come into the month of December, my expectation is that the market grid is going to collapse in a little bit. Volatility is going to start to stabilize just a little bit. We'll see if that's true, but the expectation around 4,000, 4,100, you need to watch those levels really closely. So I'm just going to leave the screen black for a minute, folks, while I try to. I'm literally going to kill this browser and bring a chart back up. So it'll take me just a minute. I appreciate your patience. Yeah, that was not a trick. I turned my microphone off, so you guys didn't hear anything I just said. I am so sorry. What a nightmare when things break in the middle of a live TV. I am so sorry. I just said some really cool stuff, I can guarantee you. Yeah, so here's what I was just saying. I'm going to recover this and redo this. The downside projections that are happening here on the weekly NASDAQ, the algos are suggesting that we're not going, this is probably not the likely scenario going down below 10,000. This bubble bottom is likely to continue. What I was saying is we need to get above the 12,000 level over the next 2 weeks. And this is a weekly chart that I have up here. Let's go back to the monthly I just had on the screen just a minute ago. Let's just focus in on this current pattern. The monthly, looking at the market grid monthly, we're looking once again around 12,008. I'm rounding numbers off, 12,817 up to the 10-period moving average, which is at 12,536. That is going to be exactly what where the major resistance is going to be. This is where, when I was talking about the S&P, you have to watch these numbers around this 10-month moving average, because we could get a serious rejection out of there to the downside. And then I'm going back to the weekly chart here. Then that would suggest that maybe we can go into these Fibonacci targets that are on the screen right now. Notice there are no upward targets, there's only downward targets, but they all go suggest, looking out 4 or 5 weeks, at more of a sideways stability and the potential maybe of getting up to the 40, which is 12,007. But as I just mentioned, we got to get over 12,000 on the NASDAQ, or it's going to be in big trouble, and it's really not acting that well. So far, obviously, we were down today, we were down 1%, but there's just still a lot of selling coming into the NASDAQ. All right, we're going to stick with the weekly chart for RTY, and it's, like I said earlier in the opening comments, it's got a much stronger profile than it does on all of the other charts, whether it's S&P or NASDAQ or any of that. That is where everything is totally different. And this is a very strong pattern. PPM 1, PPM 2. PPM 2 is a plus 0.16. This is a weekly trend. PPM 1 is still down, but it's crossing its first, second derivative. And as long as we stay above that 10-period moving average at 1770, we're likely to keep a generally positive tone here. There is a pivot. This green dots that you see where my cursor is above here, let me expand it just a little bit so you can see that those dots, this is what the Wavetech Fib tool is signaling a pivot, and that pivot is around 1994, and that would be a move there, would be above that level, would be substantial and start to signal a much stronger market. And like I said, I teased you with some of the things, but it has everything to do with small caps and some themes that are starting to flow around the markets right now. Like I said, I'll make a point to cover that at least by Thursday night. So just remember, after Thursday night, the next live stream will be on Monday during market hours. Actually, 15 minutes before the open is the plan. So yesterday I was covering the 10-year. This is the monthly. Well, I'll just leave this up here. We're coming in to as we come into November, it's very interesting that the market grid is expanding substantially. And look at these numbers. This is within expectations of volatility. Now, we did get 2 months ago, we got a RTX sell signal. Didn't mean much. We continued higher, but we are seeing some of the momentum stall. But this is monthly chart. We're a plus 9.96, 7.14, 3.25. These are huge uptrends, and a high-level consolidation is about all you could expect. But check these ranges out. S1, 390. R1, 425. The high last month, 433. This month that we're rolling over, so in October it's 433. Let's look at R2, 444, R3, 464, 481. Not saying it's going there, but most likely in this scenario, probably a S1, R1 minimum that we get an inside bar, and this expanded volatility that we're seeing here will actually start to contract a little bit and start to stabilize. I'm looking at this is a monthly. All the PPMs are still accelerating. So we're going to attempt, and hopefully this will work out good. So this is the 10-year. We want to look at the algos, and this is the weekly. So this will be good enough to take a look at. The 10-period moving average here on this is 376. I've talked about this a couple of times. One of the things that's happening, I've talked about this pattern all the time. The white line is the 10. We have a rising 10 going into the market grid. Last time we had that, I will draw this in very quickly. The last time we had that was right here in this area. You can see the 10 is rising as we go through. Market basically stabilized through that pattern. And then this next level here, we're going to have the same scenario happening up here. And we should have support along that line. Right now it's 376. This is a weekly line. And let me clear this out, and I will show you exactly where that is right now. That is 376, trying to get a rate of change here, 361. So it's going to be in the 380 to 383 handle as we come in the next week. And then it will be closer to 390. So I think everything's going to stabilize around that 392 print that we did the other day. Maybe a spike, we could go lower. But what's interesting here, and over the next 2 or 3 weeks, what it's suggesting, and we'll see what happens, is that the 10-period moving average on the 10-year Treasury is going to actually go negative. Otherwise, it's going to trend down. And that would suggest that we would head toward the 21-week moving average. And right now, that number is at the 337 level. And I know just a couple of days ago, I could bring it back up. We're talking about there's a fib target right now at 503. That doesn't mean it can't backfill here, and there's some other event down the road. But right now, everything that was looking like we were just going through the roof is on a weekly basis is starting to at least flatten out. But this 10-period moving average at its current rate of change is going to be substantial support between 375 and 383 extreme on the downside. I still expect that 392 print that we put in there the other day to be a valid place. Let's just go to the daily here, and I'll show you that number. We've got some pretty decent support coming in, like I said, at the 40 is 377, so that's very similar to the 10-week. That is going to be the extreme. Right now, the 21 and the algos are also suggesting that over the next couple of weeks, we're going to stabilize. And my basic hypothesis here is that we're going to stay in a high level consolidation with, we're going to, just like with the crude oil, same kind of thing, where we're going to get a 390, I'm going to round off 390 to 410, maybe 415 on the upside is going to be where most of these things are going. I'm going to bring this down. This is the targets that I've been talking about on the upside here. We're looking at 503, 559, 598. These are still probably valid. This trend is still positive, but we're going to go through some sort of consolidation. And does that mean that the Fed is going to pivot? I don't think so. Like I said, I don't think they will, but I think that market sentiment is gradually being changed by these other banks and some of the movements that we're getting there. So we're definitely looking at a high level consolidation on yields. And so what does that also mean? It probably means that we're going to see at least a couple more weeks. Equity markets are going to have room to breathe on the upside. And like I said, we're looking at a complete manipulation game here, especially coming into midterms a week from tomorrow, or Tuesday, a week from today, if you're watching this video right now. So just expect that everything they're going to throw at this is going to be positive, yields stable, equity markets up. I mean, it's a must go. It's the last chance for any type of win is to try to convince people things are okay. So that'll be the case for sure. All right, we'll go to crude oil next. Crude is just continuing to stay right into this range where I've been talking about. We did print down to the 85.30 level. We finished at 86. The range is really a $10 range, 82.92. Don't see anything changing there. And on the extreme on the upside would be a move up to 98, which doesn't look very likely right now. In fact, the algos are suggesting that today's rally could be the end of this rally, and we start to fall back into the range and roll over here. And we still have these downward fib targets for a move. Right now, those numbers are 79.70, 74, 71. So that is definitely still in the cards. I've talked about this a couple of times. These brackets have been in here. We've got upward and downward brackets. If the algos are very accurate. If those of you that have them already know this, is what it's telling us. You look at the values, is telling that literally in about, this is the daily chart, in 2 to 3 days that crude oil is, that the 10-period moving average is going to roll over, be negative, and ppm2, all of the averages are, and especially ppm 1 and 2, so therefore the 10-21 are about to roll south, and maybe these further downside targets become more realistic. Let's go to a weekly handle just to look at this. And it's interesting because the dailies are suggesting that, and these algos adjust as we get the actual real data that comes in, but they've been pretty good on the direction and fairly good on the magnitude. We were testing that on the live room today. We were looking at what was the expectation for the next bar and how much of it did it capture. It captured about 95% of the estimate moving forward. And 1 to 2, maybe 3 bars, there's some pretty good accuracy. After that, it gets a little fuzzy. But the next couple bars, especially if you're looking at a weekly like this, it says that we're going to stabilize here, and the 10-week is at 85. So this is really where I'm coming up with this 82.92 range. The upper end here is the 21 is 92.35, and that's everything's, at least PPM 1 and 2 are trying to stabilize here, which suggests that we're going to stay in this range within the market grid. And in fact, the way it's trading, as we come into next week, we're likely to see a further contraction of the volatility. So it's going to get a little tighter, and maybe crude oil or whatever is not going to be in focus when we start to get after the Fed meeting. Maybe it'll be some other focus, but it just looks to me that we're going to stay in this flat range, just oscillating around in and around the 86 level, which is kind of the midpoint of where this market is right now. Weekly gold. I guess maybe if the 10-year starts to flatten out, interest rates stabilize a little bit, maybe the dollar will continue to weaken, maybe the Japanese will continue to intervene. I did see also that there was some news that hit our Discord, and it was saying that the Chinese were intervening as well. So it's going to get, so everybody's trying to support themselves. King Dollar was starting to flatten out. I won't cover the dollar tonight. We'll maybe do that after the Fed on Wednesday. We'll take a look at that. But the algos are suggesting here that gold is going to start to improve. And I've been talking about this. Really, what this is the weekly. It says that the 10-week moving average is likely to turn up. There's probabilities building there. And if we do that, we're going to have to get above 1675, trade around, suspect 1700, maybe 1720. We can get up to those levels, get this thing to turn up in the next couple of weeks. Then there's some possibilities for gold to actually move in an upward direction for a while. So here we are in weekly Bitcoin. The algos are suggesting we're getting pretty close to the end. We still have this. You can see PPM1 is projecting a pretty big potential move down here on Bitcoin, and the challenge ultimately we'll have to challenge that number that I was going on and on about for a while, which was the 18.2, 18.555, 18.200, and this is really looking like we're getting close to at least completing this sequence. We'd have to close above the, let me get the exact number, 20,743 on a weekly basis. That would be on a Sunday night, and that would suggest that maybe we're going to be able to penetrate and stay above that. But it looks to me that probabilities are right now that we're going to stay in this range. We're probably peaking out right in here. I think, let's see what the ranges got up to. We got up to 21,078. And so far this week, we got up to 28.33. So last week we printed 21,078, and now we're starting. We've got basically inside week going, pretty quiet, but the algos are not very friendly here at the moment. gotta bring up the weekly Doge coin, the Musk coin. This is actually kind of interesting to look at this, because back on the 11th of July, the fib projection tool was suggesting three levels: 12, 14, we'll call it 15 cents, and 16, and we printed up to 15.19. So we went right into fib target 2, and don't know what the algos were doing at the time, but we're definitely, it's kind of interesting that we got that little ramp up there. Very interesting. Hey folks, thank you for watching. Kind of a rough stream tonight. Had some technical issues, and I have to remember, it's like this is a Windows 11 machine, and everywhere I only have one last Windows 10 machine, and I've just, since I got this new computer, I was so excited about getting it. Windows 11 has just been a nightmare, and I'm seriously thinking about wiping this thing, but that's such a big hassle to do. Anyway, thank you for your patience. Sorry about the no sound. There's too many disruptions going on and things not working. So I apologize for that. That normally doesn't happen, especially if I reboot. So that will be the standard procedure going forward. Anyway, folks, thanks for watching. I will see you guys tomorrow night here, same station, same time. And that'll be, we're getting close to the final nighttime views here. So anyway, folks, thanks again for watching. And then on Wednesday, we will be doing a live stream at 1 o'clock New York time. We'll see you there as well. Have a great evening. Good luck trading tomorrow. Porter Hill.